Hi friends, welcome to my YouTube channel Learn Commerce with Namita. I'm Namita. In today's video, let us solve one practical example of investment accounting. So this is the example on the screen. Kanpur Investment Limited, Kanpur held 1015% debentures of rupees 100 each in Chennai Industry Limited as on 1st April 2020 at the cost of rupees 1,05,000. Okay, so Kanpur Investment Limited, they hold or held 1000 debentures and the face value of 1000 debenture is 100 rupees. On 1st April 2020, the cost means the market value or the capital value of 1000 debenture is 1,05,000. Okay. Now next is what interest is payable on 30th June and 31st December every year. Now see students, in investment accounting, behind every transaction there will be a interest. Okay, so in investment accounting you have to check on which date the interest is received or payable. Now in this example, interest is payable on twice. One is 30th June and second is 31st December. Next, on 1st May 2020, 500 debentures are purchased on 1st May. Okay, debentures are purchased. How many debentures are purchased? 500 debentures are purchased. Next, are purchase come interest at 53,200. Now in investment accounting, while calculating interest, there will be two types of interest. First is cum interest and second is ex interest. So whenever there is a purchase, okay, or sell, either the sell of debentures or purchase of debentures will be on cum interest, it will be on ex interest. Okay, so whenever there is a cum interest, okay, so always remember, for cum interest, whatever interest we have calculated, that interest we have to reduce from the capital value of that debentures. Okay, and in the case of ex interest, you don't have to less any thing. Okay, ex interest will be as it is. Only in the case of cum interest, we have to reduce the interest value from the capital value. Right, while solving the example you will understand. Okay, then after that, on 1st November 2020, 600 debentures are sold ex interest at rupees 57,300. Okay, next on 13 November 2020, 400 debentures are purchased ex interest at rupees 38,400. Next is on 31st December 2020, 400 debentures are sold cum interest on rupees 55,000. Okay, now this is the example. Now next, what they are saying, prepare investment account valuing the holding on 31st March 2021 at cost applying FIFO method. Okay, so now this is the example we have read the example. Okay, now next while preparing investment accounting, now this investment is done in which this thing, in debentures. Okay, now there are three simple steps students you need to follow while preparing investment accounting. First, read the question. Okay, after reading the question, take out some important this thing points. Okay, important points means what? Important dates. Okay, like on which date the interest is paid, on which date the debentures are purchased, or on which date the debentures are sold. Write down in the chart form. Okay, after writing the important date, next is what? Prepare investment account format. Okay, so this is the format of investment account. In the books of Kanpur Investment Limited, Kanpur, debentures in which form? Now we cannot write investment there. in which particular thing we are investing? In the debentures we are investing. So write 15% debentures in Chennai industry. In which this thing we are investing the debentures? This thing in Chennai Industry Limited account. Next is what? Interest. Okay, now this is also very important. On which date the interest is received or paid? So interest is receivable on 30th June, okay, on 30th June and 31st December. Then debit side and credit side. Now first will be date, okay, then particulars. Nominal value means the face value of the debentures. Then if there is any interest, okay, we have to calculate interest. Then capital value means the cost value of the debentures. Then again same thing will be repeated in the credit side, right? So now this is what? Investment. Okay, now investment accounting account is what? Real account. Now what is the golden rule of real account? Debit what comes in and credit what goes out. So whatever purchase entry is there, you will write in the debit side, and whatever sell entry is there, okay, you will write in the credit side, right? And if there is interest received, that means it is a income, you will write in the credit side, right? This is the format. After preparing the format, there will be some working notes, okay. Working notes, in working notes you have to basically calculate the interest, and after calculating the interest in the format you have to pass the entries, okay, like date wise you have to pass the entries, okay. So now hope you have clear. By 3 steps you are going to prepare the investment account. First, note, after reading the question, note down some important dates. After noting down the important date, write the prepare the format, and last is the working note. So do the working note and pass the entries in this format, right? So now we have read the question, okay, we have read the question properly. Now I have taken down some important date, okay. Now important date in investment accounting is what? Interest. On which date the interest is paid or received? So in the question it is given interest is payable on what? On which date? 30 June and 31st December, right? So I have written it. Now as per the date wise I have taken down some important transactions, okay. Some important transactions have happened on the particular date, like on 1st April 2020, okay. On 1st April 2020, what is there? Kanpur Limited held means hold or had the 1000 debentures, okay. Now 1000 debentures is what? The number of debentures, okay. So how much value will be there? 1000 multiplied by 100. So 1 lakh is the nominal value of that debenture, and cost value of the debenture is how much? 1,05,000, right? And then on this debentures, okay, on this 1 lakh debentures there will be a interest, okay, there will be a interest outstanding. So on 1st April only there is a opening balance. On same day we have to calculate the interest. Now on which date, from where you will calculate the interest? Now last interest is paid on 31st December. From after that date you have to calculate the interest. Next is what? On 1st May 2020, okay, on 1st May 2020, what is happening? 500 debentures are purchased, okay. Purchase entry is happening, purchase transaction is happening, and the purchase is of what? 500, and purchase is done on cum interest. And what is the market value of that debentures? It is written here 53,200. Next, after May, okay, see, next transaction is in the month of November, but after May, between till November there is some interest date is there, okay. After this thing May, which month? June. So yes, we are receiving some interest in the month of June, so write the date of June, okay. Interest date 30 June 2020 interest is received, okay. Then after that After that there is means after next interest is paid in which month? In the month of December. But before December what is there? There is a transaction of what? Sale. 1st November 2020. Okay, 1st November 2020, 600 debentures are sold, and these debentures are sold on X interest. Market value of the debenture is 57,300. Okay. Next again after November, 1st November, then on 30 November 2020, 400 debentures are purchased, X interest at 38,400. So 30 November 2020, purchase 400 debentures, X interest 38,400. Okay. Next after November, okay, see 31st December, again see in the month of December we are going to receive the interest, right? Along with the interest the transaction of sale is happening. So first before taking the interest, right, this thing what? This thing sold interest. So 31st December 2020 sold 400 debentures on cum interest 55,000, and then after year one entry is remaining, that is 31st December we are receiving the interest also. Okay, interest received, and last will be the closing. We have to close this account on 1st March 2021. Okay, after noting down all the important date, we will first pass the entries. Okay, now on 1st this thing, so on 1st on 1st April 2020, what is there? Opening balance is there. Opening balance of what? 1 lakh 1000 debentures of 15% of 100 each. So nominal value, okay, of 1 lakh of 1000 will be how much? 1 lakh rupees, and cost of this debenture is 1 lakh 5,000. So in the working note I have shown on 1st April 2020 opening balance 1000 is the debentures multiplied by 100, means always remember the face value will be 100 only. We have to multiply it by 100. So 1000 multiplied by 100, 1 lakh rupees is what? A nominal value, and the capital value is 1 lakh 5,000. So this entry you will pass in the debit side. Why? Because it is the opening balance. So 1st April 2020, okay, 2020 to balance brought down, okay, because this is the opening balance. Now nominal value, how much is the nominal value? 1 lakh is the nominal value. Okay, nominal value 1 lakh. Now interest on the opening balance is not there, we will calculate in the next this thing. Then capital, how much is the capital value? 1 lakh 5,000. Okay, see here in the question it is given 1 lakh 5,000. So nominal value 1 lakh 5,000, right? Now second is what? Second working note is on 1st April 2020 interest is outstanding. Okay, how interest is outstanding or received? Because on this 1 lakh, okay, on this nominal value there is a interest. Okay, because last interest is paid when? On, means the interest is paid on which date? 30 June and 31st December. Okay, so as we are opening up investment account on 1st April, so from 31st December to 1st April there is some interest outstanding, there is some interest receivable or accrued, so we have to calculate that interest. Okay, so interest outstanding, on which amount we will calculate the interest? Always interest will be calculated on nominal value or the face value of the investment. Okay, in investment accounting interest will be calculated. Remember one thing, in the investment accounting interest will be calculated on the nominal value, and which is also called as the face value. So 1 lakh multiply by 15. Why 15 we have taken? Because investment is 15% debentures. Okay, 15% debentures, 15% debentures. Okay, 15 divided by 100, multiply by 3 divided by 12. Now interest will be calculated. Now interest is last interest is what? 31st December. Okay, December 31st means the December month is completed. So from 1st January to 1st April. Okay, so how many months are there? January, February, March. Okay, we cannot take April. Why? Because it is the first date of that month. So how many months are there? 3 months interest is calculated. So 12. Why 12? Because in 1 year there are 12 months. So 3 divided by 2. So interest is how much? 3,750. Okay, so this interest is outstanding. So write in the debit side, interest outstanding. On which date interest is outstanding? On 1st April 2020. So 2 interest outstanding. You can say it as interest accrued also. So write the interest value in the interest column, 3,750. Okay, now interest is done. Next is what is there? On 5th May. Okay, on 5th May, sorry, on 1st May 2020. Okay, on 1st May 2020 purchase is happening. Okay, purchase of what? 500 debentures, and this purchase is of what? Cum interest, and the market value or capital value of that debenture is 53,200. So in the working note, okay, say on 1st May 2020 purchase of what? 500 debentures at what? Cum interest, rupees 53,200. So 500 is what? The number of debentures. So what is the nominal value of that 500 debentures? So 500 multiplied by 100. 100 is what? The face value. So 500 multiplied by 100 is equals to 50,000. 50,000 is the nominal value. Okay. Now capital value is how much? 53,200. Right. Now on this we have to calculate the interest. So interest will be calculated. Okay. Here interest will be calculated on 50,000, not on 1 lakh. Okay. So on nominal value of the purchase, on 1st May we are purchasing 50,500 debentures. So 50,000 multiplied by 15%. Okay, 15 upon 100 multiply by 4. Okay, now why 4 months we have calculated? Now interest is to be calculated from 31st December to till 1st May. Okay, so January, February, March and April, entire month. Okay, May we cannot take because purchase is on the 1st May. So total how many months? 4 months. Okay, divided by 2. So interest is how much? 2,500. Now this 2,500, okay, we have to less from the capital value. Why? Because it is what? Cum interest. So whenever there is a cum interest, so interest whatever we have calculated interest will be reduced from the capital value. So what is the capital value of the 500 debentures? 53,200 minus 2,500. 2,500 is what? The interest is equals to 50,700. So 50,700 is our new capital value. Okay. So now this entry, okay, we have to pass this entry in the debit side. Why? Because it is a purchase. Okay, it is a purchase. So in the debit side on 1st May 2020, right, to bank. Okay, to bank. Now to bank is what? Purchase. Purchase. Now how much purchase is there? 500. Okay, so nominal value will be how much? 50,000. 50,000. Okay, then interest on this 500 debentures, interest is how much? 2,500. So write 2,500 is the interest. Next, capital value. Now which capital value you will write? You will write the value which is remaining after after reducing the interest from the capital value. So original capital value is 53,200 minus 2,500. So remaining is what? 50,700. So 50,700 will be a new capital value. So you will write 50,700. Clear? This you will do in the case of cum interest only. Okay. Now after 1st May. Okay. After 1st May. Next is what? 30 June 2020. Interest received. Okay. We are receiving the interest, right? After 1st May. Which month? After May, which month comes? June. And in the month of June, we are going to receive the interest. So interest receive calculation you will do. Okay. Now see, 30 June 2020 interest received, right? So now this interest, okay, how we will calculate, on which nominal value we are going to receive the interest, okay, on how much debentures we are going to receive the interest. Now see here, total till date, okay, till date how much investment we have made. Okay, already on 1st May we have 1 lakh debentures. Okay, then again on 1st May we have purchased 50,000 debentures. Okay, so in total how many debentures we are having? We are having 1,50,000 debentures. Okay, so on this 1,50,000 debentures we are going to receive the interest, right? So here 1,50,000 multiply by 15 divided by 100 multiply by 6 divided by 12. Now why 6 months? Because from 31st December till 30 June, okay, how many months are there? Okay, so 31st is the end of the month of the December. Okay, so January, February, March, April, okay, April, May and entire June, because at the end of the June month we are receiving the interest. So that's why how many months? 6 months. So how much interest will be there? 11,250. Okay, so this 11,250 is the interest received, that means income. Okay, so when it is an income, we have to write this income in the credit side. So on which date we are receiving the interest? On 30 June 2020, right? Okay, so right here interest is received. So by bank, interest received. Okay, so how much interest is received? Now nominal value dash, interest is received 11,250. Okay, next, so interest entry we did. Then on 1st November 2020, okay, 600 debentures are sold, and these debentures are sold X interest and market value is what? 57,300. So in the working note, write 1st November 2020 sold 600 debentures, X interest 57,300. Okay, so 600 debentures, what is the face value or nominal value of 600 debentures? 600 multiply by 100 is equals to 60,000. 60,000 is what? A nominal value, right? And the capital value of that those debentures are 57,300. Okay, now we have to calculate the interest. Now remember one thing, in investment accounting on every transaction, okay, on every transaction, whether it is a purchase or sell, you have to calculate the interest, okay. So now to calculate the interest, we have to take the nominal value, and what is the percentage of that debentures, take that, and the calculation of the month, we have to calculate the month, for how many months the interest is paid or received. So 60,000 is the nominal value of 600 debentures, then 15% debentures, okay, multiply by 4 divided by 12, okay. Now how 4 months are there, okay. So last this thing, okay, last interest, okay, we have received on which date? We have received on 30 June, okay. So after 30 June till 1st November, how many months are there? Total 4 months are there. See, 30 June month is completed. Next is what? July, August, September, October, and on 1st November we are selling a debenture. So how many months? July, August, September, October, total 4 months. So interest is how much? 3,000, okay. So now here this entry is of what? Sold, means we are selling the this thing, what? Debentures. So you will write this entry in the credit side. On which date the sale is happening? 1st November 2020. So by bank sell, okay. So nominal value is how much? Nominal value is 60,000. Nominal value is 60,000 because 600 debentures multiply by 100. Now interest we have, now this interest, yes, one more thing I forgot. Now we are not reducing the interest which we calculated from the capital value. Why? Because it is what? X interest. Okay, so whenever there is a X interest, keep the interest as it is and keep the capital value as it is. In cum interest, we have to reduce the interest from the capital value. In X interest, no need to do anything. So interest is how much? 3,000, okay, and capital value will be, capital value is 57,300. See, in the question it is given 600 debentures are sold, X interest at 57,300. So 57,300 keep as it is. Why? Because it is X interest. 57,300. Clear? This entry is completed. Now next, after 1st November, okay, then next is what? On 30 November, okay, on 30 November 2020, again 400 debentures are purchased. And this purchase is on what? X interest, and the market value or the cost value or capital value is how much? 38,400. So in the working note, okay, 30 November 2020 purchase 400 debentures X interest, and X interest market value is 38,400, which is also called as capital value. So what is the nominal value of this 400 debentures? 400 multiplied by 100 is equals to 40,000. So we got nominal value, okay, and capital value is how much? 38,400. Now calculate the interest on 40,000. So interest will be 40,000 multiplied by 15 divided by 100 multiplied by 5 divided by 12. Now interest we have to calculate on the month, okay. So last interest we received in which month? June, okay, in the month of June. So from June, 30 June to 30 November, how many months? 30 June month is completed. Then July, August, September, October and November. Why we are taking November? Because the last means on the last date 30 November, the month, entire month, on last date we are making the purchase, okay. So that's why total 5 months. So interest is 2,500. So now this is the interest, this is purchase entry. So we will write in the debit side. Okay. So 30 November 2020. To bank purchase. Okay. So nominal value is 40,000. Interest is 2,500 and capital value will be 38,400 because it is what, X interest. So keep the value as it is. 40,000 nominal value, interest 2,500, and as this purchase is of X interest, so capital value will be as it is, 38,400. Right. Next, after 30 November, okay, on 31st December 2020, 400 debentures are sold. Come interest for rupees 55,000. Okay. So check the working note. Now 31st December, on 31st December we are going to get the interest also, but before that the sell entry we will do. Okay. So sold 400 debentures, and these debentures are sold on what, come interest, rupees what, 55,000. So the nominal value of 400 debentures is what, 40,000. Okay, 400 multiplied by 100, 40,000 nominal value, capital value 55,000. Now calculate the interest. Interest will be calculated on nominal value. So 40,000 multiplied by 15 divided by 100 multiplied by 6. Now why 6? Okay, so calculate the month. Last interest we have got in the month of June. So 1st July, then after that June, which month, July, and till which date, 31st December. Okay, so July, August, September, October, November, December. Total how many months? 6 months. So the interest is what, 3,000 rupees. Now this 3,000 is the interest, and as this sell is done on the come interest, that's why we have to reduce 3,000 from the capital value. So 55,000 is the capital value, minus 3,000 is equals to, remaining is what, 52,000. So 52,000 is a new capital value, and 52,000 you have to write in the format, right? So, and this is what, sell entry. Sell entry is, so it will be in the credit side. Okay. So on 31st December, what is happening? Sell. Buy, right, buy bank, sell. Nominal value will be 40,000. Okay, nominal value is 40,000. Then interest, we got interest, 3,000 interest. Okay, 3,000 interest, and capital value will be what, 52,000. 52,000. 52,000 will be the interest. Okay. Now the purchase and sell entry we have did. Okay. Now what is there? On 31st December, interest is there. Okay, we are going to receive the interest on 31st December. So interest calculation we have to do. Now 31st December 2020, interest we are going to receive. Now on how many debentures we are going to receive the interest? Okay, this is very important. Now see here, total how many debentures we have purchased till 31st December. See, 1 lakh plus 50,000 plus 40,000. Total how many debentures we have? 1,90,000 debentures we have. From this 1,90,000 debentures, we have sold some debentures. Okay, how many debentures we have sold? 60,000 plus 40,000. That means total 1 lakh debentures we have sold. So remaining debentures, how much is the remaining debentures? 90,000 is the remaining debentures. Okay, so on this 90,000 we have to calculate the interest. Okay, clear? Hope you have understood this, why I am taking 90,000 debentures, because in total we had 1,90,000 debentures. From this 1,90,000 debentures, we have sold how many debentures? 1 lakh debentures, right? So remaining is how much? 90,000 debentures. So on 31st December, we are going to receive the interest on 90,000 debentures. Okay, so 90,000 multiply by 15 divided by 100 multiply by 6 divided by 12. Why 6 months? From 30 June to 31st December. How many months are there? July, August, September, October, December, November and December. December last entire month we are taking, because last is what? 31st December. So 6 months. So interest is how much? 6,750. Okay, so interest we have received. So write on 31st December 2012, 31st December 2020, in by bank interest received. By bank interest received. How much interest we are receiving? 6,750. 6,750. Okay, now interest, last interest we have calculated. Now next is what? On 31st March 2021 we have to close the account. Okay, so prepare investment account valuing the holding of the 31st March 2021. Now now before this, okay, so from December to March, okay, 3 months is there. Okay, we are closing this investment account on 31st March. That means still 3 month interest is accrued. Yes or no? Yes. Okay, so we have to calculate that interest accrued. Okay, interest accrued we have to calculate. So again this interest will be calculated on 90,000, because till 31st March we are getting only how we have only 90,000 debentures. So 90,000 multiply by 15 divided by 100 multiply by 3 months. Why? Because after December till March, so January, February, March, 3 months. So how much is the interest? 3,375. So we are going to receive the interest, and this interest we are going to receive on what? 31st March 2021 by interest accrued. Okay, by interest accrued, or you can write outstanding also. $3,375. Okay, so now here we have passed all the entries. Okay, now we have to close the investment account. We have to close the investment account, right? Okay, now first we will close the nominal value. Okay, nominal value. So now here see, total is how much? 1 lakh plus 50,000 plus 40,000. Total 1,90,000. Okay, now here how much is the difference? 90,000 is the difference. Okay, so 90,000 is the difference. So 31st March 2021 by balance carried down 90,000. So total will be 1,90,000. Okay, so this is clear. So nominal value, balance, both the side are same. Now interest. Okay, now we have to close the interest column. Now see, when interest will be what? The credit side interest will be more. Okay, so add, so total will be 27 375. Now see, credit is more, interest side credit is more and debit side interest is less. That means it is a profit. Okay, so now difference of this total and difference of this total will be how much? 18,625. Okay, so this interest we have to this interest we will write on 31st March 2021. So difference you have to write to interest account. Okay, interest side is more, okay, and debit side is less. So whatever is the difference, so difference is how much? 18,625. so difference is written. So now the interest side will be tally. Right, now we have to close the capital column. Okay, now see here, capital column. Okay, now see what is given in the question, that prepare investment account valuing the holding on 1st March 2021 at cost applying FIFO method. Okay, FIFO method. So total first investment, okay, first investment what we did of 1 lakh rupees, and this 1 lakh rupees we have sold the 1 lakh rupees. Okay, first come first in. FIFO means what? First come first in first out. So first 1 lakh rupees we have sold. Now what after 1 lakh rupees we have purchased 90,000 debentures. Okay, so the capital value, okay, now add this capital value 50,700 plus 38,400. How much total will be there? Balancing figure 89,100. Okay, so now from this, okay, total will be what? How I got 89,100? By adding this two capital. Okay, 50,700 plus 38,400. So total is 89,100. So add the capital will be 1,98,400. Now difference of this, okay, capital value is what? 4,300. 4,300 is a profit. So whatever profit is there, we have to transfer to P&L account. Whatever profit we earn, we have to transfer to P&L account. So to P&L account. Okay, this is a profit. Now total will be 1,98,400. Okay, so both the debit side and credit side columns are tally. Okay, right. So in this way you have to calculate the, you have to prepare the investment account. So I hope you have understood today's session. Okay, I will do a quick recap of this video or this example. See, in investment accounting you have to take down the interest date. Okay, after that note down the important date. After noting down the important date, prepare the working note. Okay, so on every transaction interest is to be calculated. If come interest is there, whatever interest is there, minus it from the capital value. For X interest no need to do anything, and then pass the entries. So whatever purchase side is there, you will write in the purchase entry is there, you will write in the debit side. In the credit side you will write all the sell entry as well as the interest received. So in this way you have to prepare the investment account. Thank you very much. Please subscribe my YouTube channel, like and share the video, and do not forget to press the bell icon to get the latest notification.